Okay, welcome back to the channel, MegaWhale team. Thanks for tuning in. If you're new here, welcome to the channel. Consider liking, commenting, and subscribing down below if you have any questions about today's video. You can find a link in the description to our Twitter and our Telegram and our VIP channel where we did over 350% profit last month alone. Let's dive right in. We'll get into the Bitcoin chart on the 1 hour, and we can see Bitcoin has formed a bull flag formation. This is where you have two trend lines, both declining and both descending, with the price moving between the two. We have a few points of interest here with these large wicks, which I will deem as fake outs, or you could even call liquidity wicks or bull or bear traps. At the moment, we have to ignore these, and I have told you guys before, we have 2 points of critical interest, which is our $48,000 range, which is going to indicate if we break above, we will continue into a new high, potentially up to the $50,000 range, and 44,400. If we lose that, and you can see we just retested it, if we lose it, we will continue down to $40,000. Between these 2 points, the price will move quite rapidly between the two. We will see price action between the major support and resistance blocks, with the occasional spike up and down between this range. That is what we've been predicting for the last few days and what we told you guys to expect, and that is what we're seeing. So don't look at these, and definitely do not get FOMO, and don't look at these and definitely do not get too panicked. At the moment, the price is just moving in a very volatile fashion sideways. It's just a very large chop. Don't look at these as determinable moves. Look at them as just random liquidity grabs or bull traps or bear traps, or however you want to look at it. All right, we're not making decisions based on these wicks. We're definitely not making decisions until either one of these two lines have crossed. Let's take a look at the total cryptocurrency market cap. As we can see, and as I told you, the total cryptocurrency market cap at 2.14 trillion is going to be that major resistance level. And if the price can get above 2.14 trillion, as you can see, a huge resistance, and we flip that, we will see altcoins will explode and Bitcoin will continue upwards. Until then, a heavy range of resistance and a very likely spot to get rejected. We have seen a strong rejection off there, currently pushing us back down to close to $2 trillion. So a very significant rejection in the last few hours. Again, like I said, everything remains. We are continuing downwards if we get rejected to 1.923 trillion, which will bring Bitcoin even lower to the $40,000 region, unless we can reclaim this zone and push over. If we push over this zone, 2.14 trillion, Bitcoin will break above the 47,000 and hold, and that will determine if we're going to break above 48k. All right, guys. So if we do break above 2.14 trillion, it's a pretty safe bet that Bitcoin will continue upwards through this range and go to new local highs. So let's zoom out a little bit on the chart. Let's take a look at some of the technical indicators and let's see what the data is telling us about this more recent move. So what we're going to do to start off with, let's go ahead and bring up the bull market support band, and we're going to zoom out to the daily to start with, and then we're going to come down to the lower time frames. So on the daily, Bitcoin is still looking like it's finding support. And of course, like I said, that 44,400 is a major support, and there's no need to get too bearish or too scared until we lose and really close a daily candle underneath. If we close a daily candle underneath, it would basically confirm that we were in this direction and move downwards, potentially even a move down to here. But we talked about in another video why this is very unlikely, and this potential scenario here is more probable. All right, so that's the bearish scenario. We can see we are finding support on the bull market support band, which is great to see. If we flip it like we flipped it here, it could lead to a rally continuing upwards here, which would be incredibly bullish. And of course, we've talked about the implications of the $48,000 break a few times. Let's bring up the clouds. So the clouds, we are seeing a significant sell signal, of course, losing the conversion line, which is always a bad thing. But we do have our lagging span also in the support range here, so it is signifying a potential bounce point. Let's bring up the RSI and the MACD next. Let's take a look at what they're telling us. And of course, the RSI and MACD used in conjunction is a great way to tell if the asset is oversold, overbought, and give us potential entries and exits, as well as give us an indication of the momentum of the trend. And we're going to draw our RSI resistance line in, or should I say support line in just a second, and we're going to see if we actually broke this support line. So drawing it across, we can see we are still under a potential resistance. Well, should I say we've still got a potential chance to find a support zone here and actually bounce. And if we get rid of the MACD for just a second and zoom in on this, we can see that we are forming, well, we did form what you would call a bit of a pennant here. But if we can delete that line and draw this trend line to here, we're forming what you would call a rising wedge. Now guys, a rising wedge is a bearish pattern, but it doesn't mean we can push, it doesn't mean we don't have a chance to push up one more last time before we move upwards. Rising wedges need 3 tests of the bottom side of the wedge, so 1, 2, 3, and 2 tests on the top side to confirm we are in a rising wedge. And we are in fact confirmed in a rising wedge. It'll be very interesting to see what happens here. This is what I would say is the most likely scenario if we saw this pattern on the price chart, but we do see this pattern on the RSI chart, so it could act a little bit differently and behave quite different to what expected and actually push up one more last time. And all we need is a push over 48k to eliminate this downward price action. If we get over 48k, it would reset a new trend and we can look from here and look a little bit more optimistic to the upside. So guys, the chart is looking interesting. I definitely wouldn't be too concerned with this more recent move. I think a bounce here is probable. We have seen a strong bounce off this bottom range, but we are very much, if we drag this downwards, we are very much still in this flag formation, and therefore we shouldn't be too scared about this recent move. It is very likely we push upwards, consolidate, and then make a move, or all these scenarios are possible. Like I said, we are in a chop zone. We can expect this sideways aggressive price volatility until we make a definitive decision if we're going to go upwards or if we're going to go downwards. All right, until then guys, stay safe, be cautious, don't overextend your positions, keep tight stop losses, but be aware of the fact, and the fact is right now is not the time to be making definitive decisions on your portfolio. Right now is a time to be cautious. Right now is a time to be looking for potential setups. Right now is the time to be planning ahead and making an exit strategy or an entry strategy based on wherever the direction continues. All right, guys, stay safe. Remember, if you like the video, consider subscribing. Join our VIP, our free channel, our Telegram, our Twitter, all the links in the description. Sorry for the short video today. I don't have a lot of time, but tomorrow's video is going to be a longer one. We'll be talking about Matic Network. The day after, we're going to be doing a video on GMT. Back to a Bitcoin video the day after, Luna the day after, and we're going to be giving you a top 5 tips on how to become a better trader the day after that. All right, so stay tuned to those videos and I'll catch you in the next one.